What's up, team? So the Fed decision was today, as well as the presser, and the market was not happy. We're going to go over the remarks from Jerome Powell that I think made that market sell off, and we're going to go over if I think we're going to get a little bit of a bounce tomorrow once the market has some time to digest everything from that presser and from that meeting. Now, Tesla did close down at about 187.94, down about 2%, and we are going to go over later in this video if I think the continuation of that move back down to 160 could happen. Now, let's go over the actual decision. So Jerome Powell says a March rate cut is not likely. Now, I don't want to talk too much about quantitative tightening and easing in the Fed, but at the end of the day, the market as a whole wants to see the Fed go ahead and start cutting rates. As rates go lower, it's always going to stimulate the economy, which therefore is going to be good for the market short term, but long term can cause massive repercussions, such as massive inflation that we've seen over the past couple of years. And if they don't start to tighten to counterbalance that, then we would end up seeing inflation continue to run and run and run. That's why, a couple of years ago, as we were coming out of that Rona push and we saw inflation getting even more ridiculous than anybody probably thought, the only way the Fed could combat that was through quantitative tightening and aggressively raising rates. So overall, the fact that the market and the economy, I should say, not the market, the fact that the economy seems to be in a healthy state coming from Fed Chair Powell himself, to me, that's a good sign. I don't think the market should be where it is right now. I think we're extremely overvalued. I don't think there are a lot of companies that I would say are attractive at this point. I do plan to share a lot of my long-term analysis of a lot of other companies, including Tesla, later on, in the next couple of weeks and months on this channel. But there's not a lot of companies that are undervalued. And these tech valuations are only going to continue to move up higher and higher. And we're probably going to see a sector rotation. We're probably going to see more money come out of tech in the next couple of months. Probably see it get pushed into travel. We're seeing it getting pushed into finance. We're seeing it getting pushed into commercial real estate. We're probably going to see it getting pushed into energy and oil. So big money never stops and never stops moving. They just push them into sectors that are undervalued. Especially when you see something like this, where it seems like overall the economy is pretty strong, especially coming from Jerome Powell. So let's go through the actual article and kind of what was said at this point. So Fed Jerome Powell said on Wednesday that the central bank would not be comfortable enough with the path of inflation by its next meeting to cut interest rates in March. So, quote, based on the meeting today, I will tell you that I don't think it's likely that the committee will actually reach a level of confidence by the time in March. Identifying March as the time to do that, but that's still seen. So as of right now, think of this from like a guidance perspective. He's saying that he does not think that they will have enough confidence. Remember, the market does not like uncertainty, whether it's good or bad. The market hates it. It's like a baby. So when you hear something like this from the Fed chair, that they eat no matter, even though they're saying that it wouldn't be bad, it's just more that they're not comfortable. That word comfortable is the big thing here. So going into this more, the statement came from a news conference after the Fed's January meeting. Stocks fell at their session lows as the Fed dashed hopes of traders who would want the central banks to slash rates sooner before there's a recession. The Fed policy statement released earlier on Wednesday included several tweaks that suggested the central bank was taking further rate hikes off the table, but not yet ready to cut. Powell's comments appeared to clarify to traders that the stance would continue at least for one more meeting. Quote, the Fed was badly burnt in late 2021 and 2022 when they thought high inflation would be transitory, and then got caught by surprise when it was higher and persistent than expected. Like we said earlier, when you're just fucking printing money, right? Quantitative easing, when you're just printing money, as we've done for so long, we're going to see nothing but inflation go up and up and up, and the only way to combat that is through quantitative tightening or raising rates. I mean, there's other aspects to quantitative tightening that we can go over in another video, but one of the easiest ways that people think of it is just by rate hikes. So overall, that's kind of where we're left right now. How's the market going to respond going into tomorrow? Sometimes we will see these Fed decisions and, everything comes in line. We'll see the market sell off, and then we'll see it get bought back up the very next day. Now, we do have a different, Fed decision that's happening now. We have a Fed decision that is slammed between 2 days of major big tech earnings. So obviously, Tesla's earnings were not the best. We saw Meta's coming up on Thursday. We saw Google perform very shittily. pulling back down to probably 140. I'm going to do a standalone video on this. And I want to say overall, their earnings weren't terrible. It was more of the fact that they gave no guidance and no outlook at all on their AI software. I'm forgetting off the name of theirs off the top of my head. If you guys remember, comment. But the fact that they're not giving guidance and what's giving all of these companies, the major evaluations right now is AI. So when a company like Google, that the whole world is waiting to see what they have in store, and they don't show anything, they don't allude to anything, it's not going to make investors happy. So, we still have some more earnings to come up on Thursday, and we'll see what ends up happening with those. Let's talk about Tesla briefly now. We saw Tesla push back up, hitting today at about 195. This is not a good candle, if we're just going to be honest here. If we're looking at this from a psychological standpoint, you have a candle that opened right here around where we closed, pushed all the way back up into this 193, 194 level, which I called out a trade over on my Twitter/X on that. So if you guys want to get access to real-time trades of mine, I do throw them over there on X. But we saw that rejection and then this continued sell-off. So going into tomorrow, we're really going to have to watch 185, but 180 is that next level of support. To be quite honest, if we start to break through this, I'm expecting that we will see this move back down into the 160s because, as we've been talking about for a while, we have this big bullish order block that's sitting down here from all the way back in April. Now, if we zoom back out and we move to a weekly chart here, I'm going to just remove this for a second. You are going to see that we have the bullish order block that we talked about before, and we do have this bearish order block sitting up here. So what we're looking for is either the sell-off back down into 160, 140, which I will start to add to my positions long term. And if not, then when we move back up into 240, we would have to look for this potential breakout over this level. Now, overall, the biggest thing that I want to say before we hop off is to not get upset or get frustrated by the market. And I know it's a lot easier to say that than to actually do that. But what you have to understand is you really, truly cannot change the market. So for you to get upset, or even to get happy for that matter, when things go your way or they don't go your way, is just stupid. It's like when I see people who follow me and they're like, dude, you're the GOAT, you're so good. Dude, I like it, but at the end of the day, I'm not doing anything. I'm not the one moving the market. I'm not the reason you made money. I actually was not the person who stepped in and pushed the stock higher. I was not the person to do that. And in the same essence, I'm not the same person when you lose, right? I wasn't the one who drove the stock down. Of course not. So for you to spend all this mental energy and potentially self-hatred or having too big of an ego thinking that you're the best, it's almost worthless, right? Instead, look at it for what it is. It's just data. It's just data and it's numbers and there's no emotion, and it's your responsibility to keep it that way. I hope this video helps, guys. Check out our Discord community. You guys can get access to all of my trades, all my trading bots, as well as much, much more. The link is in the description. Thank you guys for all of your support, and I'll see you next time. Peace.